there's only a few topics that bring this much emotion to people. You know, sex, politics, and religion, and maybe money. Those four, you get a reaction because you don't talk about these things, you know, in the general public around. You don't talk about it's just not the subject most people want to get into because it usually creates some kind of emotion that isn't necessarily positive. Because if people have a lot of money, sometimes they feel a little, you know, guilty, and if they don't have it, they feel embarrassed or ashamed. You know, and money has no power. Money has the power to create, and money has the power to destroy. You can, you know, create an opportunity, you can give, you can deliver, you can make things happen, you can destroy things. You know, you can use it as an expression of your love or your hate. It can be any of those things. So money to me really is just a tool to be used in a life of service, in a life where you serve your family and your friends and yourself. But
if it's a reality of your life, why not master it a little bit? If it's there and you have to deal with it on a daily basis, why not do something about it, right?
But when you talk to the most wealthy people in the world, they all see it as a game. I say all, the vast majority. And why else would somebody who's just made $2, $3, or $4, $10 billion work 14 hours a day? Because when you realize it's a game, then you realize that means there's some rules. Now some people say, well, game, that makes it sound frivolous. Not all games are frivolous. I say games are a reflection of life. Some people play to win. Some people stand on the sideline and watch everybody else and clap or, you know, be upset or point fingers. You know, how do you play is what I say to people. And what I say to people, you walk through these 7 steps with me, you will win this game, and you got a chance to win it really big because there's nothing in this book that's me. Emotional and psychological, yes, that's been my expertise for 36 years. But most people know that I've been coaching for 21 years, one of the top 10 financial traders in the history of the world. His name's Paul Tudor Jones. 28 straight years of victories at a company level. I've been working for 21 consecutive years. He emails me every day, gives me his report, what he's done, measuring it. I get to go see him every 90 days. I've been with him in the tech crash of 2000 and watched him make money and figure out how to do it. I've been with him in 9/11. I did it when the subprime crisis happened and the whole world was melting down. And in 2008, Paul made almost 30%. I mean, it's just, and when everybody else was losing, I'm just
because he knows the rules of
the game. He knows the rules of the game, and so I've got his rules. I've got Carl Icahn's rules. I got a man named Ray Dalio. Most people outside the financial business don't know his name, but he's been called the Steve Jobs of investing, the Da Vinci of investing, because this is a man who you had to give him $5 billion to get his advice and give him $100 million to start. That was 10 years ago. Now you can't get him no matter what. Governments, you're sitting down with him and the Prime Minister of China calls to interrupt the meeting because he needs a little coaching from Ray. So I got him to share me what he does.
I want people to know about the book. That guy, you got literally his formula and how he does it in this book. I mean, something that literally billionaires are looking for and calling him on. You broke it down.
What was beautiful was when I got to these people, by impact and by referral. Because I worked with Paul Tudor, he introduced me some. And then when I got to them and they saw, you know, I'm donating all the money to this book. This is not about me. I want what's real. I want to bring the average American, somebody who's just starting the journey, maybe a millennial or somebody who's getting out of college and got all this debt and they don't know how am I going to turn things around. Or maybe a soccer mom or a divorced man or woman saying, I'm trying to take care of my kids and my life and how am I going to build a future and put my kids through college? Or maybe even a sophisticated investor who wants to know what Dalio does. I want to hit all those buttons and make it real. So when I went in the beginning, I got to guys like Carl Icahn. I mean, Carl Icahn, to give you an idea, people have no clue. If you would have invested in Carl Icahn in 1968, Carl Icahn, Kiplinger did a study, your average annual return, with Carl Icahn is 31%.
Wow.
With Warren Buffett, it's 20%.
Wow.
In the last 14 years, if you'd invested in Icahn Enterprise, if you're along with him there, you would have made 1,600%. If you were in the S&P 500, you got 76%.
Right.
I mean, he has dwarfed everyone on Earth. Time Magazine did a cover and they said, master of the universe. When I went to go see him, he did a tweet about Apple. And in 1 hour, Apple stock went up $17 billion with a B. This guy is unbelievable, but he's also rather direct and gruff. I love him now, but I went in to go see him. I thought, this guy, to get to this guy's brain and find out what he's doing, and it's the day he cashes in and makes $2 billion on Netflix that day, and it's just like so smart. And the first thing happens, he agrees to it, and then my camera crew shows up, like your team, and he goes, I don't want a camera crew. I said, wait a second, this morning your secretary said you approved. I said, I don't want him. Right? And it was like, okay. And, you know, he gets taken advantage of. So he's sensitized. And, he, last minute, like, who is this guy? What's it going to be? And then, okay, well, my sound crew. No sound crew. I said, well, what am I supposed to do? He said, take notes. You got 10 minutes. I'm like, holy shit. What am I going to get up in 10 minutes, right?
This is the game. He's setting up the game for you. He's setting up the game.
Set me down and see how can I play, right? How am I going to play under pressure with his rules, right?
That's right.
And what's beautiful is he got who I really was, what I was really about. I dug in with him, and 3 hours later, my average interview was supposed to be 45 minutes. They're 3 hour average. And he's sharing things, hugging me and saying, you can really make a difference in the world, and gave me a quote from the book where he said, all investors will be illuminated by this. Sophisticated or unsophisticated, it's going to change their life. So when those things happen, then I go to, let's say, for example, to Vanguard. I go find the founder of Vanguard, Jack Bogle, and 45 minutes, I'm with him 4.5 hours. And he wrote a quote at the end that says, the most probing interviewed, and what he said was the word, the most probing, and I forget what it was, but the deepest interview basically that he's generated.
In 3 hours.
Yeah, no, he said in his career.
Wow.
63 years he's been interviewed by everybody. So that tells me that I was able to engage him pretty damn well, and he supported the book as well. And then Ray, the most important one is Ray. Out of all 50 people, it's like they're all phenomenal, but with Ray, I prepared for 18 hours, literally around the clock, stayed up that night till 5 in the morning, slept 3 hours so I could go be with him, because I wanted to pitch and catch with him. I knew if I was going to engage him, this was one of the smartest minds literally on earth. And so I was ready, and then I got there and I was able to do it, and it turned out he'd been a fan of mine for 20 plus years, listening to my stuff. So we created this great chemistry. So after 3 hours, almost 2.5 hours at that point, I said, Ray, this question I asked them all. If you couldn't give any of your money, none of it, to your kids, all you could give them was the best of what you learned in the form of a formula, a set of strategies or a portfolio, what would it be? He said, well, Tony, my alpha fund is, it's averaged 21% per year for the last 23 straight years. He said, that's been our average. He said, before expenses and so forth, before fees. He said, but that takes 1,500 people to do, and who are the best in the business, and I'm one of the best poker players, and even for me, that's tough to do. What am I going to do when I'm not here for all the things I care about? My kids, what am I going to do for all the nonprofits that I support? And he said, I started tinkering and saying, the best investors are always asking a different question. And he said, I started thinking, everybody thinks a balanced portfolio is the way you protect yourself. Mm-hmm. He said, but a balanced portfolio, half your money in stocks, half in bonds, or 60% in stocks, 40 in bonds. He said, in all the meltdowns, it doesn't work. 2008, they both went down. So this idea we have about asset allocation, which is the most important part of, by the way, investing for anybody listening, asset allocation is where do you put your money and what proportions? Mm-hmm. What's the right formula? He said, it's all wrong. And he said, I dug and I dug and I dug and I figured something out. He said, I figured out that stocks are 3 times more volatile, more intense up and down than bonds. So when you think you're 50-50 or 60-40, you're really 95% at risk and 5% secure. And because when I figured that out, he said, I figured a new way, and I figured a way to make money no matter what happens, because all investments do well in different environments. And he's divided the universe of what can happen into 4 seasons. And he said, I figured out a formula so that you can make money in any season, and your losses, when you lose, everybody loses, but when you lose is so small by comparison. So he explains the whole thing to me.
That formula, you kind of have, this is the basis for the game.
It's the basis for the game from the master.
Right.
That's why I said, when I tell people, if you're going to master the game, you want to learn from the masters in the game, right? You don't want to try and learn on your own. He's been doing it 40 years, and most people can't do what he does. So he's the best of the best. So I said to him, I said, explain the whole thing. So I'm going to put that in the book. It's going to blow people away. It's incredible. You're incredibly generous. But I said, look, what really makes this work is knowing the exact percentages. Because, like a lot of people try to copy that, they'll say it's inspired by Dalio funds. And they don't do anything close to Dalio, not even in the same universe as Dalio. It's just a marketing theme. So I said, I want to know the real numbers. He goes, Tony. He said, it's complex.
We can't put this in a $20-some book.
Well, no, he didn't say that, but he did say, that's when he gave him the whole $5 billion. He goes, look, it takes $5 billion to work with me and $100 million initial investment. I said, but you just told me that you haven't taken in anybody in any amount of money for 10 years. You don't want any more money. He goes, yeah. And I said, you're also giving away your half of your $14 billion net worth. I mean, the guy's unbelievably generous. I said, give me the secret sauce. Right? He goes, Tony, it's too complex. I said, I know it's complex. Make it simple. I can make it simple. He goes, well, there's some leverage. I said, show me one without leverage. He goes, well, I said, come on, give me the secrets. Like, give it to me, right? Help the little guy out. And I got him laughing. And he finally said, well, I could give you something. It won't be absolutely perfect. I said, your idea of not perfect will be better than anybody else's top piece. And there's like I got chills in my body as he started describing to me. And I got the video going, and I'm capturing like crazy. And at the end, he goes, yeah. He said, you go run those numbers and you can bring them back to me and I'll look them over and make sure they're right. But he said, I think that would do it for the average person, and they could, we'll check the rebalancing, probably once a year rebalance. And he said, they could do it with most of it with ETFs and things like that.
And they'll beat the market.
Yeah, and he said, so why don't you go check that out? So I now have some partners in a variety of portions of the business and financial area, and I have a great company that I'm associated with, which is called Hightower. It's the 5th largest registered investment advisory. It's the best in the world. They strip out all the fees. They make all the banks compete to give you the best fees. You see everything transparent, 30 billion in assets, but they only work with ultra wealthy people. And I wanted to get them to work with the average person. So I went back to them. I went to 2 other organizations, said, run these numbers. Let's do a 30-year run, like the most volatile times, right? 40-year run. Let's do a 75-year run. Just see it. Most people, they look at something over a 5 or 10-year period. I want to see all those. Do the 5 or 10-year period too. 10-year period blew away the S&P, but here's what's really unbelievable. In the last 30 years, it lost money only 4 times.
Wow.
And one of those 4 times, it lost 0.003%. So it was break even. Right. So you really practically lost 3 times in 30 years. But here's the most unbelievable thing. The average loss is 1.9%. But the average upside was just under 10.
Wow.
So if you imagine
for 30-year spread.
For 30-year spread. Then same numbers in 40 years. At 75 years, it's 85% successful. 30, 40, 75 years. You make money 85% of the time. And when you lose, average loss over 75 years was 1.6%. The most he ever lost in 75 years was 3.9%, less than 4%, and that was in 2008 when the market from top to bottom was 51% down. So if I said to you, you could go to Vegas and you could bet as much as you wanted, and if you bet, you'd be right 85% of the time, and if you lost, you'd lose an average of 1.9 or 1.6%. How much would you bet? How long would you bet? How much you go for?
Right.
So look,
that's what the surprise I think people are going to find in the book is because when I'm reading it, it's not like you're talking about this conceptual level. You're telling this story, but you're not talking about conceptual level. This is it's
exactly what you can do. And by the way, everybody around me said, "This is a business. Don't put that in the book. Like we want to do this over here. We want to run a fund." I said, "You can go run a fund, and people want you to do it. Great." But I said it was offered in the spirit of helping everybody, so it's in the book. I mean,
it's in the book.
You invest in this $28 retail book. I don't know what you get it at Amazon, right. $25, $24 less, whatever it is. But I mean, and you're going to get what a guy that spent $5 billion to get. Now, it's not. There's no guarantee of the future is the same as the past. But what's unique about this is designed so it doesn't matter what the future is. Right. Like most people make money because they anticipate what the market's going to do. He's saying, I don't care what the market's doing. Any market that happens, this is how you win.